Hello guys, welcome back to my YouTube channel. So in today's video, we're going to be talking about the smart money concept known as the SMC. All right, so what we're going to be looking out for today is how to actually treat the smart money concept using the concept of the order blocks and many more. So please, if you are new to my channel, endeavor to hit the like button and subscribe. So without wasting much of your time, let's just kick up and proceed. Let me just show you what I have for you guys. So for today's video, we're looking at the smart money concept. So imagine the market is pushing to the upside where you have your highs, your lows, your highs, your lows. So the market is just basically pushing to the upside. All right, so we have highs and lows, and finally now we have what a stop rate, and then we have a stop rate, then we have what a change in character, and then after the change in character we have some impulsive move, impulsive move. This is internal uptrend. Within this move, after the change in character, you have these moves. Okay, you have this move, and then finally we hit the order block, which is our supply area, and then we have a change in character, and then finally. So now I just want to like go deep and break this thing down for you guys so that you get to understand. So here right now we have what a break of market structure, which means that the market actually broke this area and what created a high. So we have a break of market structure. Same thing here, we have a break of market structure. All right. So same thing here, we have a break of what market structure. Have a break of market structure. All right. So I just want to break it down so that you guys get to follow. Okay, guys. So we have our break of market structure. We have a what? Our break of what market structure? We have our break of market structure. All right. So now let me just go ahead and just change this. All right. We have a break BOS, break of market structure. Okay. Break of market structure. All right. So whenever the market creates a high, it has to break a particular structure to create what? A high. So as it does that, it leaves what? A demand zone. If it's in what? If it's what in an uptrend, it leaves a demand zone, and then if it's in a downtrend, it leaves what? A supply zone. So what actually the market did here is what? A fake out, because it took the stop loss line around this area because it was actually a fake out, and then it finally what came back to this, broke this particular low, and then we have what? A change in what character. So what the market did here is we have what? We have a false high being created, which is a stop hunt, and then finally we have what? A change in character by the market breaking out this low, and then creating a lower low, which means the market is no longer what? In an uptrend, and then we are expecting what? A downtrend. So let me just go ahead and clear this thing so that I get to simplify it for you guys to see. Okay, let me just simplify it for you guys to see. All right. So now let me just bring this back. Just give me a moment. Okay. All right. So now looking at this, now we have what? This area, we have our what? Change in what? Character. We have our change in character. That means the market is no longer trending to the upside. It's now trending to what? The downside. So when the market is trending to the downside, what are you going to be looking for? You're going to be looking for what? For selling opportunities. So since the market is no longer trending to the upside, we're going to be looking for what? For selling opportunities. So as the market was pushing to the downside before taking out this low, the stop loss line within this low, there was a supply zone. Like I said, when the market is pushing to the upside, we have what? Our demand zone, and when the market is pushing to the downside, we have what? Our supply zone. So in this particular case, since the trend of the market has actually changed, the trend of the market has what? Actually changed. We are no longer having highs and lows. So we now have, within this move, there's a particular candle that actually caused what? The break of this market structure. So we have a particular candle within this area, within this zone. So that becomes what? Our supply zone. This particular area becomes our what? Our supply zone. So wait for the market to actually get to that area, then we'll be looking for selling opportunities. We'll be looking for selling opportunities. So when the market comes back to that area, wait for us to see you can decide to trade aggressively by executing your orders within this area, or depend on the kind of information you get, or you can try to be a conservative trader by waiting for the market to also change what the character, like for it to break this particular low and then give us what a retest. Okay, so to trade conservatively, you have to wait for the market to like break this particular previous low and then come back to retest the supply zone within this particular move that took out the low. So I hope you guys are just getting what I said. So I will just go back to the main chart and show you exactly what I'm actually talking about. But before that, here we have stop loss lying around this area. So, but before that, we're just going to be looking at a downtrend scenario. So for a downtrend scenario, we have the market pushing to the downside. We can just invert that though, but I just want us to follow so that you get to actually understand. We have the market pushing to the downside, and then we have a higher low, a lower low being created, a higher low being created, a higher low being created. And with each low being created, we have a break of what? Market structure. So finally we have what? A false breakout and then a change in what character. If it changes in what character, and then the market finally puts before that change in character, let me just, I'll just do that a little bit. Before that change in character, we have these small moves. Okay, we have the small moves. Okay, and then we have another change in character, and just okay. So let me just readjust this, okay, a bit. All right, so it will look similar like what I've actually been illustrating here. So these are internal what lower lows and internal. So but we are waiting for the big off moves. So now what we have here is we have a break of what market structure. The market pushing to the downside, we have our break of market structure, market pushing to the downside, and then we have another break of market structure. So like I said, before the market breaks its structure, there is what is supply zone. There's the market creates a supply zone before it gains momentum to go and break that structure. So that supply zone can be at a particular key level or at an internal, like internal within the particular within the candles within that area, and then it pushes to the downside. So here we have our break of market structure, our BOS. Let me just change it. We have our BOS here, right? We have our BOS. We have a BOS here, and then here also we have a break of market structure, and finally here we have our stop loss slash fake out. Okay, stop hunt slash fake out. And finally here we have a change in character. We have a change in character. After the change in character, the market came back to pick what a demand zone within this area. Okay, and then we bought all the way to the upside. So here we have our change in character. All right, so we have a change in character, and then you can actually buy from here. You can buy from here, or you buy, because if you want to be aggressive, you can buy from here, and then if you want to be aggressive, you can buy from here and target the highs. Okay, and buy from there and target the highs. And then if you want to be conservative, you wait for the market to like break this area, and then gives you a change in character, and then but all the same, you still get the same results. Okay, but you have to like practice. Okay, guys, you have to practice and practice. So before you can actually get acquainted with these principles. Okay, they work actually well. So now let's go to the charts. Okay, let's go to the main chart. Let's look at, first thing we're going to be looking at, the GBP card. Okay, we're looking at the 1 hour time frame. All right, so now guys, let me just take you here. So I took my time to actually mark it out. So because of time, so I don't take too much time explaining this particular concept. We have our break of market structure, okay, and then this is the break of market structure. The BOS, we also have a break of market structure, right? So And then here we also have a break of market structure. So, but our major concern is what on the 1 hour time frame. I'm just going to go to the 1 hour time frame. Like I said, like I explained in the video, when we're looking at the scenario of an uptrend, and here what we have here is what we have stop loss hunts. Okay, stop loss were being taken out. So we have the stop loss being hunted. Okay, all the stops there were being taken out. So finally, market what did it? We did have what a change in character. All right. So now let's go to the 1 hour time. Let's look at the 30 minutes time frame, because that is where the exact thing is. So just give me a moment. Let me just screw to that area, guys. Just give me a moment. Let me screw to that area. All right. After we're done with this, we're going to be looking at the pound yen. So we're going to be looking at the pound yen. So so looking at this now, you can actually see that the market was moving to the upside. We have a break of market structure. We have a market pushing to the upside. We have a break of market structure. We have a corrective move. We have our corrective move. We have our impulsive move. We have our corrective move. We have our impulsive move. We have our corrective move. So just the market was just moving in an impulsive corrective move to the upside. All right, so finally what happened here is we have finally had our change in what the character. So what happened here is the market created a high and then created a low, but in the process guys, so the market created what a high here and then created a low here. So since it tried to push to the upside, but after it could not have enough momentum, but it did what took the stop loss above that area, all the stop losses above that what area. It took all the stop losses above that area. So after taking the stop losses, guys, what happened? After taking the stop losses, so after the market took out the stop losses within this area, all the stop losses within this area, which was more like a fake out. So it came all the way, then broke this low, okay, broke this low, which means the market has actually what changed its direction. We had it what changed in character. So after the change in character, just give me a second, guys. After the change in character, right? Like I said, we have a supply zone here. We have our supply zone. Let me just go ahead and change this to supply zone. Okay, we have our supply zone. So the market came back to it, and then you could have just taken your sales. You could have just taken your sales, and then you could have just taken your sales, and with your stop loss being right above that zone, and then you can take your first target can be below, and then your next target is just kind of like target below these areas here. You can just target those key levels like here. You can just target those areas. So guys, when marking your break of market structure, you also have to like include the weeks, guys. You also have to include the week. So now what happened here, what we are looking at here is what a clear what downtrend. Let me just go back there. We have a clear what downtrend, guys. We have a clear what downtrend, and then you can actually see that the market kept breaking lows. All right, kept breaking lows and lows. We have breaking of market structure, and the market kept pushing to the downside. And if you want to swing, you can actually swing, but I would suggest like you go for what you want, catch it, and then wait for another opportunity. Do that quite often, and you keep making money. So now let's look at another pair. We're going to be looking at the pound yen. So now looking at the pound yen, what are we looking at? All right, so I just want to show you guys something. Okay, just want to show you guys something really quick. Okay, so we are looking at this area, right? The market is like moving to the downside. Okay, so the market is to the downside because one thing is we have a break of this area, which is a break of market structure, right? And we have also this break of market structure. We have the break of market structure. We also have the break of this area, break of market structure. Sorry, let me just use this. We have a break of market structure, right? My drawings might not be perfect, but guys, I'm sure and I'm certain that you actually get an understanding. We have our break of market structure. We also have our break of market structure, which is here. So what are you looking for? You're looking for selling opportunities. All right. So, but here the market actually created like what we're looking at. We have our break of market structure here. Break of market structure. We have our break of market structure. We have our what? Finally, we have our break of market structure. Right. Like I told you guys before, this is the stop loss hunt. Okay. Stop loss were actually taken out. Stop loss were taken out. We have our break of market structure here. Right. So we have our break of market structure. Just have a break of market structure. So there were stop losses being taken out within this area. Okay, guys. So after the stop loss, we had what stop after the stop rate. Okay, the market broke this low, which means we have our change in what character. So this indicates that we have what a change in what character. So we should be looking for sales because the overall direction of this market is what to the downside. So what happened? The market came back to like retest what our supply zone. The market came back to retest our supply zone. We have this impulsive move to the upside, corrective move to the downside. We have these moves. Okay, we have these moves. And finally, it got to our supply zone. Boom, to the downside. So have you seen it, guys? That's why I advise you not to like aim for bigger target, okay? Just aim for your good 1:3, 1:4 risk to reward. Sometimes you can even get 1:5 with the smart money concepts, guys. So now looking at this, the market came back to our supply zone. Market came back to our supply zone. And even looking at the nature and behavior of what these candlestick patterns, guys, you can see that the market is actually lacking what momentum. Market is actually lacking what momentum, and you could have just sold with your stop loss just slightly above that level, which is like a 30 pips, and then see how much you made. 1:5 is a good risk to reward, so you don't have to be greedy, guys. So please, if you like my video, please endeavor to hit the like button and subscribe to this Telegram channel, to this YouTube channel, okay? And also you can share this video to as many people as possible, and also follow us on the Telegram channel. See you guys in my next episode.